Hey traders, Raghee here, and in this recap video we're going to talk about gold here. Now, some of the questions that I've been getting quite a bit over the past few months, because I was quite a vocal bear back in September, and the rollover in October happened, and then all of a sudden the end of month, I think really re-asset allocation, sort of change in the asset blend, end of year rally we saw send markets higher. But then the market started to sell off, by the way. Some of you might know that. Let me just go back to the S&P here for a moment. Before the Powell put got put in, we saw the market rally up. This was that crazy day, historical day. And I don't mean crazy in any other way than just absolute monster move point-wise. Got us back up to a level that I believe the market decided it wanted to sell, and it did, right? On this day right here, that was the Powell put, gang. That particular candle right there, we can see what's happened subsequent to that. So the Powell put is in, and mixed with that, although nowhere near as importantly weighted, is the optimism about the US and China. So does this change my bearishness? That's one of the questions that I've been getting. And it really doesn't, gang. My bearishness is not predicated solely on the downtrend in the S&P. The reason that we were talking about the market rolling over, despite the fact that we were seeing higher highs, really even into September, was that the data shifted, gang. The data shifted. And the trend in data is what I look at. If somebody asks me what is macro analysis, to me it's the trend in data. Now, I'm sure other people might look at it differently. And macro is not why we get in or out of the market. Macro dictates directionally what I might think, as do so many of my other tools, like the GRaB candles, right? So, by the way, so just to kind of tackle that, am I still a bear? I am, and not even because of today's move. Although today's move is the first move that's made any sense in a really long time, considering just how much everyone is just putting all emphasis on the Powell put and ignoring slowdowns in China, in Europe, and here in the US even as well. All right, so whether you agree with that or not, I imagine for some folks that might be an off-putting statement, but one of the things that I did not all that long ago, just last week actually, I did a breakdown of the way in which the four sort of stages of the economy work. This was taught to me by my mentor. This is nothing that is that unusual. It's a basis on an understanding what central banks look at. Gang, it's almost like being your own central banker. This is not like newsflash stuff. This is not fancy stuff. This is keeping with the tried and true. What is the GDP or growth of a country? What is the inflation? What is subsequently the monetary policy? And then what is the liquidity of the currency? Both the currency for the country and for the US dollar. And I do this for every single country that I trade. So, obviously we talk about the US dollar in this light. So if you look at that particular ABCD model that I talk about, gauging the trend in growth, the trend in inflation, even the trend in the monetary policy, and then the way in which dollars fuel domestic and international growth. So let's head back on over to gold, because I'm even talking myself out of my own topic. But there's so much I love to share with you all during these recap videos, and it gives you a peek into what we do inside the membership. So gold has been a market that's been particularly resilient to the Powell put. We saw just how much bonds pulled back, which, by the way, triggered a very nice pullback to the wave, and subsequently for us a long position, not just in the 30 and the 10. Maybe we'll talk about that another time. But here's gold. And gold has, I believe, successfully, if you want to use the word, decoupled from the US dollar. In other words, for a while, gold and the dollar were moving inverse to one another, and that's just not the case right now. The other thing that I want to mention is that when I'm looking at gold, look at the green GRaB candles here, gang. There's a reason I use these things. These give you a very clear visual on the trend. The consistency of the green candles lets you be really certain about the bullishness of the market. That's really what we're talking about here. All those green GRaB candles, bullish. Okay, as long as we stay green, I know I've got a bullish market. So when we pull back into an anticipated correction zone, whether that be a 21 EMA, whether that be a 34 EMA on the high, whatever that level may be, maybe it's a previous support level, maybe it's a minor psychological level, right? Our zone has been, for the most part, between about 1281 and 1277 in that zone. So when we pull back into that area, it triggers a buy. And why am I confident about that buy? Because we're trending, right? So as long as you understand following the GRaB candles gives you insight into the trend, into the sentiment, and into the momentum, you've got a better idea as to whether something is a reversal or whether something is a retracement. And that's the power of the GRaB candles. Now, once you understand the difference between reversals and retracements, all of a sudden you are free to buy pullbacks in an uptrend, buy the dip, right? Or sell the rip in a downtrend, or even understand when trends have shifted, when we have reversed from one trend possibly into another market trend. It could be a sideways chop, or it could be a buying opportunity, right? So these are the kind of things that we look at when we are looking at the GRaB candles. And in this case, green GRaB candles just lays out a nice road for us to buy pullbacks in gold, which we will continue to do. I'll see you in the next update.